All right, this video is going to talk more about the Fannie Mae removing the credit floor for mortgages. All right, this is going to go into a little bit of detail on what you guys have been asking. First, yes, you do have to qualify to repay the mortgage still. Yep, we're still going to look at that. And so that means you have to have favorable debt to income ratios. Okay, we'll go into that in detail when you apply. And then you also have to show the ability to be able to make the payments also. So the income has to be there for qualification. All right. So simple math for a lot of folks, guys. When you look at like 1% of the home sales price, if you can afford that with your purchase, your monthly mortgage principal and interest, your taxes, your insurance, and your utilities and maintenance, if you can afford 1% of the sales price of that in your budget, you're most likely able to buy that house. Okay, we can go into that in more detail. The other thing some people are worried about is having a very high interest rate. Well, do you guys already know that there's loan level pricing adjustments for credit scores? So the credit check is not going away, okay? If you have a 740 plus credit score, you're going to qualify for the best rates. If you have about a 660, 640, 660, that's like your average credit score, and that's going to give you the average interest rate. People that have a 580 credit score and they have to go an FHA loan, they always get a higher interest rate, guys. It's going to be there. And for people that have no money, guys, you still are going to need probably at least $10,000 to apply to the transaction. Yeah, you need to have some money in reserves. We don't want to put you house poor, okay? You got to be able to make a living. We don't want to overstretch you. Most of our clients we can approve for much more house than they can afford. But you need to be able to have a life, have a good time with your friends and family, okay? So we can go over all that stuff too. So you're always going to pay more with a lower interest rate. So I can tell you right now, if you have a 580 credit score compared to a 780 credit score and you want to purchase a $400,000 house, it's approximately about $220 a month in interest difference. All right, we can show you the math. Okay, other thing, if you guys are worried about 2008 happening, or you're worried about, oh my God, I don't know if I can qualify. Well, how about take that little extra step and show us? Let's get an application so we can go through your financial position, because maybe you are ready. Maybe you're just a negative ninny and don't know no better yet. Or we can set you up on a roadmap to get you where you want to be. Simple as that, guys. We'll tell you the simple things to get there. It's just, not just me, the whole team. We do loans in 30 states. Oh, the other thing, the last thing for the really negative folks out there, they're saying, oh, but Adam, 2008 is going to happen because you're not going to look at income. Okay, guys, go look this stuff up because most of y'all don't want to and never have looked it up. The Democrat Party under Clinton signed into legislation the incentives that caused the 2008 crash. They sold America on the idea that we're going to provide more access to capital to Americans. And you know what that did? It raised the maximum credit interest rate, maximum interest rate on our credit cards from 18.99 to 29.99%. Do y'all remember that? You guys that are over 40 should. And then do you remember that they signed into legislation the incentives that allowed the banks to not look at credit, not look at income, not look at the debt to income ratios or the ability to repay? That's what happens when you have big government in charge. Right now we have business owners in charge. What I don't like is the mention of a 50-year mortgage. That, no matter how they say it's going to help ownership, that's going to debt you to the banks, right? There's a 40-year mortgage out there for interest only for investors. There's some interest only loans you can get as owner occupied. But unless you're just in a really tight position, I highly don't recommend that stuff, guys. So I'm giving you guys real facts, real information, real numbers. You want to read the headlines, blah, blah, blah. Go read those headlines. But if you actually want to make a decision, you actually want to take your step forward, and you want to see what you can really qualify for and what the market really is out, how the market really is, give me a holler. We'll set it up. Send me a DM. Tell me what you want to do with a little bit of detail. Include the state. Talk to you guys soon. Thanks.